What's up guys, Taiki here, and welcome to part 2 of the series, How Does DeFi Get to a Trillion TVL? Where at the beginning of every month, we take a step back and ask ourselves, how do we get back to its previous all-time highs at 175 billion, according to DeFi Llama? Right now, the TVL is at 38.2, and when I made this video last month, it was 37.8. So, a $400 million increase in a month. That's cool and all, but that's nowhere near good enough. And I ask myself this question all the time as like a full-time DeFi bull analyst, or whatever you want to call it. And I have a few opinions that I want to share. Obviously, right, DeFi TVL is denominated mostly in Bitcoin, Ether, and stablecoins. Okay, because people lock up their crypto monies in these smart contracts. If the price of these crypto money like assets go up, then obviously TVL goes up. And also, there's a lot of dollars in the ecosystem. So if the stablecoin market cap goes up, then TVL also goes up. And at September, right? So like when I last made a video, the stablecoin market cap looked like this, and I was like, okay, like maybe it's kind of like holding support here. But fast forward to October, and I mean, maybe this is like the rate of change of like the decline is getting much better, but obviously we're still seeing stablecoin outflows instead of inflows, and this is nowhere near good enough. And people have different arguments on, or people have different opinions on like how we see TVL go up. Some people think that price needs to pump first and then dollars will chase. And that kind of makes sense, right? But I'm not of that opinion. I'm of the opinion that in order for price to go up, we first need to see the stablecoin market cap go up, because like, look at this, right? I mean, like, how can we expect price to go up sustainably if like literally like the dollars in the system is only bleeding? And thinking long and hard, and I came to this conclusion a couple months ago. And I was really looking deep into DeFi, like crypto native applications, like the value proposition and like the value it creates. But unfortunately, I just think that in this macro regime where interest rates and the risk-free rate is above 5%, DeFi applications just cannot compete, right? Crypto native applications just can't create enough value for people to, people are not going to choose like 5% risk-free rate over, like 10% random crypto yield, right? I mean, that's just the cold hard truth. And I think the only way right now for capital to flow back to the ecosystem is via tokenized treasuries or real world assets, where we have entities and projects buying T-bills off-chain, and then whenever those T-bills mature, flowing those interest payments from off-chain to on-chain and distributing those yields to token holders, and then, or to put it simply, bringing the risk-free rate on-chain. Because this is the projection of the Fed funds rate, and the market projects that we're not going to see like rate cuts until the latter half of next year. But even like so, right? Like even if the risk-free rate goes like, let's say 4.5%, like can crypto applications compete with that? I mean, yeah. I mean, the benchmark gets lowered a little bit, but like this is like nowhere. Like crypto applications, I think is like nowhere good enough. And I think if we're trying to recreate the traditional financial system on like blockchain rails, I think like the crypto maxis, they have this like certain way of thinking where they tell themselves and others that TradFi needs to onboard like crypto, right? TradFi needs to adopt crypto or they're going to become irrelevant. So people think that okay, like let's just keep building crypto applications and then eventually TradFi will adopt it. I think that's pretty unrealistic. I think what needs to happen is for the crypto builders to continue building, and some projects, right, some teams just has to build like a bridge from, let's say, crypto to TradFi. Okay, and if you don't meet them in the middle, I just like don't see how TradFi like moves over. And I kind of view RWAs as like a Trojan horse, where TradFi sees the value prop of permissionless blockchains, instant settlement, fast settlement times, and then as more TVL flows in the ecosystem, then maybe we can actually build superior financial products on top via composable smart contracts. And I've talked about this multiple times. But unfortunately, like we don't have that right now, just because of pure greed. Okay, because right now the largest stablecoins is obviously USDC and USDT. And what do, right? As their business model, well, they take in your dollars, right? So if you deposit $10,000 into Coinbase, you mint USDC. Circle says thank you, right? Thank you for your money. We're gonna mint 10,000 USDC, which doesn't pay anything, and then with like the fiat that you gave them, they're gonna buy T-bills and they're gonna keep all the profits. Of course, if you hold USDC on Coinbase, you get some yield, but that's not really DeFi, right? I mean, that's literally like just a savings account. And Tether like does the same thing, right? They literally take your backing, buy T-bills, they keep all the profits, and they make like roughly $1 billion every single quarter. And like, why wouldn't they, right? It's a great business model. The stablecoin holders don't demand like yield, so like they're going to keep these profits. And I think we're entering this macro regime shift where some projects are going to say, you know what, like we need to eat into that market cap, right? Like we need to eat into that market share. Like why don't we issue our own stablecoins, take some backing, buy T-bills, and then distribute those interest payments on chain? Okay, and this is like what's been happening with SDAI, and it's been of the opinion that I think in order for DeFi TVL to hit $1 trillion, we need to see like the DAI. So for example, everyone knows like the DAI stablecoin, right? You can stake your DAI in the DAI savings rate, the DSR, and earn 5%. Where's the yield coming from? It's coming from T-bills, and the TVL of this has been pretty much up only. And last month when I made this video, it was at 1.31 billion, so a pretty decent amount of capital. And if you think about it, right, it's like DeFi TVL like went up $400 million, right, from 37.8 to 38.2, and then the amount of money in the DSR went from 1.3 to 1.65, right? Basically a $350 million increase. And of course, right, like I'm not saying that like this is like the only source of TVL growth, but it's a sign that, like why hold USDC? Why hold USDT? Just like not doing anything in your wallet when you can literally just stake it in the DSR and 5%. Okay, and this is kind of like a vampire attack on the USDC market cap, because what like DAI is essentially doing is people put in USDC to mint DAI, and with the backing, right, like MakerDAO redeems the USDC into fiat and then buy T-bills. So it's kind of like a slow vampire attack in a way. And I had this discussion with Nick Carter, which I'm sure a lot of people know as like a Bitcoiner, a pretty famous writer, speaker, and whatnot. And he had a really good talk at Token 2149, which I really respect, or which I encourage people to read. And like the market is punishing stablecoins, like issuers, for their greed. And I think it's inevitable that we see more and more stablecoin projects issue their stablecoin, or like offshore, and like it may be like more lenient regulatory regimes, and then slowly eat away at the market cap of USDC. And even like hopefully eventually USDC and USDT feel the pressure, and they're going to be forced to share some of the yield to like on-chain participants, right? Not to like Coinbase stakers, but like like actual on-chain participants. And back to real world assets, I think a lot of people don't like RWAs. There's all the pushback. For example, I'll talk about this. And like I'm not really like against this person. He's just sharing an opinion, right? I mean, it's Twitter, people share their opinions. But I think the word RWA triggers people. And I think a lot of people get into crypto because they have this certain mindset about we don't like TradFi, and it's like we want to build crypto native applications, and we want to say fuck the banks or whatever, right? That's kind of like the vibe, right? That's definitely like the vibe. And then a lot of people get triggered because, well, like, is this even DeFi, right? You're literally just tokenizing T-bills on chain. Yes, you're creating a yield bearing dollar, right? Like a yield bearing stablecoin, but is that really DeFi? That's not really DeFi. And I mean, of course, it's not purely DeFi, but like I mentioned, it's always a spectrum, right? Like DeFi is never going to be like 100% decentralized. It's going to be a spectrum, right? Like some people prefer like more centralized products. Some people prefer purely decentralized products, but it's not like black or white. There's like a gray area in between. And unfortunately, right, like the purely decentralized products in DeFi are just like not great, right? Like not bad. Not good. Okay. Why would people LP for some random stablecoin get paid 10%? I mean, yeah, like that's 10% is higher than 5%, but is it really worth the risk, right? Like you can go to Fidelity, Coinbase, clip 5% yield. Do I really want to LP on some like random DEX to earn 10, 20%? Probably not. So that's one of the reasons why, or I mean, that's basically like the only reason, or like the main reason why DeFi TVL has gone down only. And as stablecoins leave the system, prices across the board goes down, the yields go down because most yield is paid on the token. The fundamentals look really, really bad. No one uses these protocols. And that's kind of like the DeFi despair. But I'm making the case for the past couple of months that I think, these tokenized treasuries can actually, lead to like a more sustainable bull market, because like why not create products that people want? Because the simple question is, do people want 5% yield on dollars? Yes or no? Obviously yes. Okay, this is a good product, so people will put money in it. Cool. So if people make more products that are good, like tokenizing yield off chain to on chain, maybe, you know, like doing some financial engineering and like maybe boosting it to like 8%, 10%. I mean, that's going to be a good product, right? And is it purely DeFi? No. But it's giving permissionless access to the risk-free rate on chain, because right now, only US citizens have like an easy way to earn the risk-free rate. But if you live in some third world country where, like, let's say like the Turkish lira, right? It's like down only, right? It's like one of the worst like currencies out there. I know a lot of people, or I heard stories of people like that literally take their salary in the lira and then immediately convert it to Tether. Okay. And what if there's like a mobile application, right, in the future where, you know, like anyone can take their salaries in their respective fiat currencies, but have it immediately transferred to a stablecoin and then have that stablecoin be staked into, let's say, the DSR, earning 5%. I mean, I would expect millions of people to adopt that type of application. Of course, there's regulatory uncertainty there, but, you know, like there's a lot of hate, right? Like RWAs trigger a lot of people. And then Paper Imperium had a pretty interesting thread here, where, you know, it's like I said, it's like a spectrum. I think it's interesting to think about like Ethereum as like a emerging economy. Okay, and if you think about like the simplest way to think about it is, you know, like the only way for people to put dollars into the system is if the system creates value. And unfortunately, right, crypto is not creating enough value. So the only hedge against like purely DeFi is to, you know what, like let's try to bridge, right? Let's try to meet in the middle. And if you want to be purely CeFi, right, like no risk, then yeah, go to Fidelity. If you want like options, if you want permissionless access to, you know, yields, and maybe you're not like a US citizen, then yes, like the DSR is a pretty good product, right? DAI has been around for many years. It's pretty lindy, it's pretty battle tested. And I think, you know, people are much more comfortable with 5% on the DSR than 10% in some random farm, on like some random L2, right? It's just like not really worth the risk here. And Evan, right? Evan, I think he's a good follow. I talked to him a lot about around the RWA thesis. We're both of the opinion that, like, you know, like we both think like why are people fighting this, right? It's inevitable. It's happening whether you like it or not. This is probably the only credible path to TVL being all-time highs. It allows like the protocolization of Tether Circle passing yield onto holders, because they're not gonna do it, right? Like they're greedy, right? They have shareholders. They're gonna keep all the profits. Like, are crypto people okay with that? I mean, if not, then like why not like adopt something that's, you know, like maybe that's like more fair. I mean, maybe fair is like not the right word, but, you know, you kind of get what I'm going for. And it also enables for a lot of cool new things. And I think the order of operations is, let's first, you know, so right. Let's start with tokenized treasuries. Okay, like when I say RWAs, like I'm bullish on RWAs. Like I'm not bullish tokenizing watches, tokenizing sneakers, I don't know, like trading stocks, commodities on chain. I don't know, like, you know, real world lending. No, like, you know, like tokenized treasuries are a subsector of the real world asset class, right? That entire sector. And I think, you know, the simplest product is like literally create a yield bearing dollar, right? A yield bearing stablecoin. And I also made this argument that if like I think the term RWAs trigger people, but like what if instead of like the RWA narrative, it was called the yield bearing dollar narrative? Okay, I think people would like buy that narrative, right? It's just like, you know, it's called RWAs, and people like just don't think, you know, like just like don't connect the dots. Because I mean, at the beginning of the year, we saw like the liquid staking derivative narrative, right? It's like, oh, like yield bearing ETH. Wow, like that's so smart, right? That's so obvious. And now I'm literally saying, you know what? Like for DeFi TVL to come back, we need yield bearing dollars. Like I don't understand why there's pushback on this narrative. But you know, it's and I also think that, you know, this type of sentiment still makes me think that we're in the relatively early stages of like the yield bearing dollar narrative. I mean, you can call it like the RWA narrative, but I'm going to start calling it the yield bearing dollar narrative. But I mean, you know, like RWAs as a term stuck around, so I don't think it's like really possible to, you know, flip like change like the wording and whatnot. You know, like it doesn't fit their ideology. Like as I mentioned, right, it's like the only credible way. And do people really, you know, yeah, like I said, like meet them in the middle? And if you think about, you know, because we always talk about, you know, like the institutions are coming, they're going to buy our bags, right? And eventually they will come to buy our bags. But like, what are they going to buy, right? Like, are they going to buy some meme coin? No. Are they going to buy, you know, like some random Yeah, like whatever, right? Like what are they going to buy first? Of course, like they're probably going to adopt Bitcoin and Ether first, and then they're probably going to like buy into like tokenization, right? Like, I mean, Larry Fink, right? Like, people love this guy because he's bald, and BlackRock is trying to create like a Bitcoin ETF. I mean, I get it, but like what is BlackRock going to buy, right? I think they're more likely to buy something like Maker over any other coin. I'm not saying that they're going to buy Maker. I think it's very unlikely. But I think if TradFi were to like bridge like billions of dollars on chain, like it's going to be led by stablecoins first. Okay, it's going to be led by something around tokenization. BlackRock even invested in Circle, right? So you already know where the puck is going. And I mentioned in my video last month, or like 2 months ago, right, in August, that I think RWAs is the Trojan horse, and crypto people can be like, like look at these RWAs, right, like permissionless tokenization of securities and bonds. It's like, wow, like TradFi is like, wow, like that's really cool, right? Like that's so smart. Wow, like I can make so much money adopting crypto. But then like over time, right? Like this is how TradFi bridges to crypto, right? This is how TradFi eventually shifts to blockchains and like adopts crypto rails. Not the other way around. So that's going to be it for me. Hopefully, you kind of get where I'm at with the RWA thesis. I think it's the only credible path for DeFi to hit all-time highs. Like in this higher, interest rate environment, like can meme coins pump? Yeah, like they can pump for like a course of a couple of weeks or maybe even a couple of months. But can that sustain? Like not really, probably not. Why? Because there's not that much money in the ecosystem. How do we, bring money back to the ecosystem? Tokenized treasuries. And tokenized treasuries actually are like a positive sum game, right? Because most yields in crypto comes from like token yields or like in token emissions. So, sure, if you're farming it, you're making money, but anyone that's holding tokens just gets wrecked. But at least with token, like at least with this, like we know where the yield is coming from. And if we're literally pumping off-chain yield from off-chain to on-chain, then that's like indirectly, like that's creating wealth within the ecosystem. And if people on chain like just make money, right? I mean, like 5% yield is like not much, but I mean, by definition, they're making money. Then that can actually trickle into other DeFi applications. That can trickle down to other coins, right? More wealth creates for more opportunities. Like I said, it's going to be a slow process. Like I'm not saying that we're going to get to like all-time highs like by end of year, like definitely not. But I think the most important trend to watch is adoption of the DSR, adoption of other real-world asset projects like tokenization of treasuries, and that's kind of like, I mean, if you like watch my videos, right? I mean, literally, just go to my channel here. Right, it's like all these things I've talked about is literally around like how does DeFi become anti-fragile? It's going to be around stablecoin projects, and those are the projects that I am personally like very, very bullish on. So thank you guys for watching. See you guys another time, and have fun farming out there, and best of luck. Bye bye.